Welcome back to The Big Skinny, and it's time to welcome our first guest. I told you before that he's become a fast friend. He's also become a fast beast in the weight room. Man, I got to get on his program, both investing, technology insights, and working out. Daniel Newman, CEO of the Futurum Group. It's good to have you back, my buddy.
It's good to see you. You're everywhere, and now you've got the Big Skinny. So
I could say the same about you.
Show, Big Skinny show. You got all the shows, Lou. I'm just excited to be in your orbit.
Oh, man, you're too kind. Listen, let's talk shop because that's our favorite thing to do. And you have unique insights that I don't think anyone maybe that is in my universe yet understands fully. But you're directly working with the biggest tech companies in the world, which gives you a unique understanding of where their priorities are, where the spending is going to go. And I believe you have some new research out from your company today about AI demand. Is this accelerating? Is it bigger than we expected? What can you share with us today that most people don't know about yet?
Yeah, we put out our 5-year chip forecast, 25 to 29, and it's pretty incredible. It's nearing 600 billion. The AI chip. This is just the data center AI component, not including memory. So if you actually add in the cooling and thermals and everything, we're going to be darn near a trillion by the end of the decade, which is just incredible. But a lot of it's sort of been determined in a way that most of us understand. Like Nvidia is still going to carry the lion's share, but there are some interesting things in there, Lou. Like for instance, we've been very bullish on the custom AI chips, and we know Jensen's not. And I'm an Nvidia bull. Love the company, think it's great. But of course, Jensen doesn't believe that AI chips by custom providers like Marvell and Broadcom and by the way, ARM will be in this space soon enough too.
Look, man, I agree. I think ARM is a sleeper play in the AI chip space. I've loved that business when it went private, and I was happy that it came back public. So good to hear that. So ARM's going to be. Go ahead.
Let me say one thought. The acceleration of the XPUs will actually, according to our research, the growth will be faster by the end of the decade for XPUs, custom chips. And let me tell you why. All you out there, you'll appreciate this. Because it takes 3 to 4 generations of these chips to really start to grab hold. But we've seen what Google's been able to do. And now you've got Amazon, Microsoft, you've got, Alibaba, you've got, Apple's going to come down the pike, OpenAI. All these companies with custom AI projects are really going to start to see the benefits 3-4 years from now. But until then, it's pretty much clear skies for our friends at Nvidia.
So you don't see really a cage fight for XPUs until we get further in the trend. Is that a function of inference becoming more important than just large language model training? What is the driver from the AI side of the technology side that's going to lead to more custom chips versus more general ones?
Well, there's a ton of interest and demand, but you've seen Microsoft kicked its project down the road a little bit. Oracle, there's some murmurs that they're going to do their own chip. Obviously, a huge buyer of Nvidia. OpenAI is kind of threatened to do a chip, and the way Sam creates enemies, he's going to have to make his own. I actually see an ARM Intel OpenAI chip. Just bear with me. That's what I see happening.
Interesting. Well, let's pull on that thread a little bit because Intel big in the news today because tomorrow they'll close on that I think it amounts to an $11.1 billion investment from the U.S. government. What's your thoughts on that? You fan? You anti?
Had to do it. This is existential. The idea that, hey, let free markets reign. I was amazed, Lou, at the number of left-leaning voters that suddenly became.
Bernie Sanders is a fan for it, dude.
Huge free market capitalist. But then at the same time, we have to secure the silicon supply chain. We have to bring the IP here. TSMC is a great company. They're the #1 company on the Futurum Equities AI 15 list. We think it's monopoly. We think it has control of its pricing. It basically controls the winners and losers of this AI boom. And if China ever decided to accelerate or double down on its aggressions to Taiwan, the United States could become the de facto Taiwanese military. And worse off, if they actually were able to successfully attack all of the key engineers that will bring us the next process nodes, the processes beyond, N2, the one that they're building in Arizona, A16 and others, would never make it here. We don't have the IP here. We need a strong.
But do you think? but do you think this $11 billion roughly investment brings the IP here? I guess my thing is, isn't Intel's problem an innovation problem? Is it not a victim of too much success and then, large behemoths don't innovate as much? Or how do you see this playing out?
It needs to invest to make sure that its 18A and 14A processes succeed. But 14A is competitive with the A16 process, A14 process from TSMC on a spec basis. The difference is we have had the US, Intel has had the brain drain. It has lost too much talent. It needs to be shored up. But again, what better way to shore up a company and create some confidence for top engineers and employees to return than knowing that this company's been basically minted?
Yeah.
Like I said, this is the most accurate example of where too big to fail is truly the case. Like the banks, let them burn. But in terms of semiconductors,
come on, dude. I was a banker. You can't tell us to burn, but no, I'm with you. Technology is more critical.
As far as I'm concerned, my friend. I'm just kidding. But in all seriousness, we can't be wrong here. We cannot be wrong here. You're talking about multiple decades to bring in fresh capital and stand up a foundry network. This is not something you can just be like, oh, we've raised a bunch of private equity and we're going to stand up some fabs. It's not realistic. We have to do this. I mean, look at Samsung just trying to even get out of its own way. It hasn't been able to get its own way for multiple years, and it's still struggling right now.
I think that's important distinction because in today's, on-demand everything type of economy and market and world, to understand that building these bleeding edge next generation nodes and technology is a huge capital investment, a huge time investment. So I can concede that. I just struggle with the free market philosophy of the government intervening in business. And how do you know when it's, these were granted as grants first and now you want strings attached? So I struggle.
So hold on. Let's play that out. You and I tend to be on the same side of most political arguments. I think we tend to be conservative leaning on most things. First of all, the grants weren't no strings. They had ridiculous strings attached to them. In terms of things that would have made it almost impossible for the companies receiving chip grants to actually get the talent in the door, like the specific hiring requirements. Again, I'm all for thoughtful diversity. I'm not for forcing it to which you build planes that fall out of the sky or you build fabs that don't produce leading edge chips. So that was part of it. Second thing is, why not have it this is a non-voting share. It's like a sovereign wealth fund investing in a nationalistic interest as far as I'm concerned. Why not allow Intel to be buoyed to build a strong company? TSMC, by the way, 49% was held by the Taiwanese government because they put the first money in, and it's been one of the biggest returns to the Taiwan economy has been the success of TSMC.
Yeah.
So
Look, you make a convincing.
The taxpayers get their money back.
Yeah, you make a convincing argument from that because I can come down on the side of national security, securing, the American capitalistic markets. These are things, this technology is critical to that. I just worry about creep, right? Policy creep that leads, and the president out today saying, well, there could be other companies. And, obviously he can say one thing today and change his mind tomorrow. That's my reservation.
I think it's provocation, Lou. It's like the 15% tax, the export tax on, like, we might do this with everyone. This is great. I mean, bottom line is they love to leave this kind of open-ended so that if they decide, like, where else could this happen? Maybe a Micron, a company that's historically bounced between great profits and great disdain because of memory inconsistency. But again, can't do Nvidia chips without memory chips. They're the only US company that can do that. So I know we got to keep moving here, but like, I actually think of all the policies, the US has never been free markets. It's never been free markets in my lifetime. It's always been, whether it's been AIG, whether it's been the banks, whether it's been the car companies, whether it's been the airlines, they're always buoying things that are considered strategic. There's nothing more strategic than this. Like, you can drive a car if you don't want to fly on a commercial airline. If we don't have chips, we're going back to the Stone Age, and we will lose our global economic leadership. So this is existential.
Yeah, you may not realize this, but now this is our 21st episode. We forgot to say that, so we have to take a shot later today for our 21st birthday, man. But more times than not, guests come on this show like yourself and change my mind. And that's the whole point of this, because it's be humble in the market or be humbled. Like, you providing an insight that I didn't think about because of where you sit in the world. So, all right, I'm changed my mind. I'm still not buying Intel, but I believe the government investing is not necessarily.
By the way, can I say one last thing on this one? Because I know we've got a lot of other cool stuff to talk about.
Yeah.
But I actually said there, I'm not bullish Intel yet. I'm bullish USA. I am bullish USA, and I'm not willing to acquiesce our entire silicon supply chain to Taiwan. I'm just not willing
Yeah.
to do it.
No,
So
it
I'm
makes
all for the
sense.
US. They could split it off for all I care, Lou. They could split it off.
I'm bullish on America pins, buddy. We got them in the studio. You must have left it here last time. How about that?
I'll be on the show with you Friday. You and I are sitting on Fox Business together.
All right, I'll
Friday,
wear
right?
this on one side and the I love fossil fuels on the other one. All right, I got to bring up another thing. We kind of disagree on this. Apple of my eye, you had a tweet out that makes me sound like it could turn into a grapefruit here because it's doing silly things. You're souring on it. Apple turning to Google to fix Siri is next level hilarious. Ferrari turning to Porsche to design next generation of race cars. All right, what's so gaff-worthy of this move by Apple? Help me understand.
The people that like to argue with me are going to say they always use other technology. They've been using Google for search forever.
I got to cross that out. That's what I had on my list to say to you, but
okay. I mean, look, AI is not something that Apple can miss. Okay. Right now, they're basically 100% depending on the fact that their device, this device, the one that's sitting here, you probably have one here, right? I'm an Apple user, wearing it on my wrist. Is this even going to be the device, the actual type of device in 5 years that with AI that we use? I mean, I don't think that's what Jony Ive joined OpenAI to create. Yeah. I think it's going to be wearable. I think we're going to return to having our heads up in society. It's probably going to be something like what Zuck is doing with glasses.
Do you think that gains traction with the Zucks? I mean, they just launched they're going to coming out with their next version of that. It's got a wrist-borne, device that complements it. Do you think that's where we're headed? Small, head-mounted displays that can.
My concern is just that Apple doesn't seem to have any plan if this doesn't work. Like the 2.2+ billion install base, in my opinion, I think I've been very rational about the fact that they have time. But just as every single thing they've tried with AI has been garbage. I can't figure out how a company with their resources can't do it in-house. And our friend Dan Ives, to get him to flip and tell them to go buy Perplexity, do something, that in my opinion was like peak Apple is dropping the ball. Because Dan would defend Apple to any extreme. Like he's like Goldman Sachs credit card, greatest invention ever, for Apple. But it's like, he actually came, and when he came out, I'm like, I'm onto something here. They have to do something. Look, Siri is an abomination.
I agree with you, and I was towing the line as a long-term Apple shareholder from like a split-adjusted price of 40 that, hey, they're never the leader, they're the laggard, they come from behind and figure it out. But I'm like you now. I'm convincing that with the shares they leapfrogged and trade at a premium multiple now. For years they didn't. That it's hard to justify buying more Apple at these levels until you see a clear path forward for them in AI. So I give you a hard time, but I'm in your camp on this. But I'm not going to sell my shares prematurely.
I'd buy more Viking.
What's
Viking. That? I'd sell it and buy Viking.
Yeah, see, all right. Perfect segue. Perfect segue here because, we've been talking about your biz. I want you to let you talk about your book because you have some great trades. You obviously can't invest in the companies that you represent that are clients of yours, but you can invest in the markets. You've been a very savvy investor, except Viking. We both lost some money in that on paper. On their GLP-1 pill that I think will ultimately be vindicated. But what are one or two names you love in this market right now?
Well, first of all, I played the options very well on that. I both sold the incredible volatility. I sold covered calls at $145 for $2 a share on my entire position heading into the data drop. And it was an incredible premium for a stock that was at $40 that we're getting $2 on a 145 strike in 6 months out. Less than 6 months, actually. And I also sold a whole bunch of put spreads well below it. And I closed all of them out right before the data drop as well, because the stock had gone up, the premiums had been wiped out, made a lot of actual realized gains. And now I'm holding my position and I went longer. I think the data was pretty good. I think the Mizuho analyst didn't know what he was talking about. And I think the reiterations on the price targets from almost all of the banks at near $100 will vindicate me over time. SoFi,
I agree with you. I bought even more. So after the drop, I bought more. But hey, if anyone else has questions for Daniel, don't be afraid to join the conversation. We're live streaming on multiple platforms. You can throw anything at us. I know from just personal experience here, we can handle it. So don't be afraid.
Yeah.
So what else do you like? Viking you like even after the data, we'll call it a disappointment, short-term disappointment. But what do you love right now in the current market?
I'm a very Munger-like investor. I hold things for very long times. I sometimes play options for leverage on positions instead of ever selling them. Like if I think it's not moving enough, I'll sell covered calls. If I think it's underpriced, I'll sell puts to get more exposure or collect premiums at lower price. So that's my play. I did this with SoFi, by the way, for almost 4 years. I bought my first shares right around the SPAC price of 10, $11, but I rode it all the way up. And I'm one of those guys that owned shares at $25 of the IPOE days. But then,
Wow.
about 10% of my position, then over the next 4 years, I 10x'd my position, buying all the way down to that $4 and change price that it had at the very, very bottom. And I've amassed a position that even some institutions would be envious of. And
Well,
at
for
this
people that
point,
don't know SoFi, what are they doing that's so disruptive that you have so much conviction about it?
democratizing finances and doing it in a way that really meets like regulatory. So here's what I'm saying: like they're more of like the Teladoc Health versus like Hims is more Robinhood, meaning
Got
like
it.
they're doing it like really by the book. They're following all the protocols, but like 90% of people aren't big investors in the market. So they have some financial products, they have some Bitcoin exposure, they have some access to some private products, but also things like loans, student loans, home loans, auto loans, banking, regular, and then doing it all digitally. And then, of course, I love Anthony Noto. I just think he's a very measured. He was a West Point graduate. He's never takes the bait from the street. He's not been a champion. I talk about the Vlads and the Alex Karps, the showman CEO. He's not that, but I always knew that this company had potential to be great. And so I'm very long. And by the way, long Robinhood, long Hims, long a lot of those kinds of companies too. But I have about 5 or 6 positions. So really, when you kind of hit my book, like 80% of my portfolio, Viking, SoFi, Oscar, Hims. What else am I in? Robinhood, and I think that's the majority of my entire portfolio.
Well, let's leave it right there because that's a great way of value add. You got a bunch of stock picks out there. I will say I own Viking, I own SoFi. I haven't jumped into Hims. I'm looking at Robinhood, but
But
I'm
the
like,
peptide boom,
I know
Hims.
I gotta get guns like yours before too long. Thankfully,
I'm
the
just
shot's not
saying,
wide
personalized
enough.
medicine.
Yeah, personalized medicine is the future. I'm seeing it in the biotech world for cancer treatments. The peptide world is definitely bringing it down to personalized wellness. So that's the next topic we'll bring you back on because you've gone through quite a transformation there, which is impressive. If people haven't checked out Daniel's Twitter feed, please go do it. He's the guy you want on your side when you're walking through New York City, going to get a bagel and cream cheese. Because if anyone messes with you, they're not gonna live to see the next day. But hey, man, good to have you again. We'll have you back soon, hopefully, and I'll see you later this week.
Yeah, let's go.